A very good morning, everyone. This is Gaurav Shresth, product manager for E-Margin. So today we have a webinar on a E-Margin product. This is a leverage product which is used for a positional trading. So we will go through the basic of this product. We will cover the importance and the important features of the product and how you can trade, how you can see the stock. So basically all the important point regarding the product, we will cover that. So before starting, again, thank you very much for all of you to joining us on this Tuesday morning. I hope you are having a great trading week ahead. So starting with the product, starting with the webinar. So E-Margin is a leverage product which allows you and empowers you with the extra buying power. So what it does basically, let's suppose you want to buy a stock and you want to buy it on a leverage, in the sense that you have around 1 lakh rupees you want to buy and you want to invest 3 lakh rupees or 4 lakh rupees. So you can do that with the help of a E-Margin product. You can buy with the leverage and you can hold the stock up to T plus 275 days. So what is T plus 275 days? That means 275 trading days you can hold the stock. This is the main benefit of a E-Margin. So the key features, there are 5 main key features for the E-Margin. First, that you can buy the stock today and you can pay on or before T plus 275 days. Okay, so this is the first important feature of a E-Margin. The second part is that you can increase your buying power up to 4 times. Now that will depend from stock to stock. It will vary from different stock, but you can increase your buying power up to 4 times. The third main key feature is that it helps you to amplify your profit potential. Basically, if your investment value will increase, so obviously your profit potential will also increase. So that is also one of the key features of E-Margin. The fourth point is that the nominal charge is applied on the leverage taken till you use the service or until your position is settled. So what that means basically, that the leverage amount that you have taken, on that the interest will be charged. Okay. Now this is the important thing. The leverage that you have taken means, let's suppose your total investment is 3 lakh rupees. Out of that, 1 lakh rupees is paid by you, 2 lakh rupees is paid by us. 2 lakh rupees is the leverage. So on 2 lakh rupees, the interest will be charged, and that interest will be charged until you use the service or until the position is set. The position can be taken against the cash or by keeping the share as collateral as well. So let's suppose you are investing 3 lakh rupees. So the 1 lakh rupees that you have to pay, the upfront margin, that amount either you can pay it by cash or you can also use the limit. Now I hope all of you understand that if let's suppose you have a share in your Demat account and you keep it in a collateral, if you keep it in a pledge, you get a certain trading limit for that, right? So you can also use a trading limit instead of paying the cash. So that is an extra benefit for the some of the client who are having a big portfolio with us. They don't even need to pay the upfront margin amount. They just need to use their trading limit, and that's it. They will be able to create a new position. So these are the key features of E-Margin. I hope this point is very clear. The fourth point, the nominal charge, the interest charge, that is 18% per annum. So that comes to around 0.05%. Now, just to make things more clear, we have a comparison between the cash order and the E-Margin order. Cash order is a normal delivery order that most of you are doing it right now. That is buying a stock by paying the entire value. Okay. And E-Margin orders are the leverage orders. So what is the difference between them? We will give you the comparison so you can understand it properly. Let's assume that you have a bullish view on a stock. The stock price is 100 rupees and you expect the stock rate to go up to 125. And assuming that you have around 1 lakh rupees to invest. So in a normal delivery, what happens? You can pay, you will be required to pay 100% of the funding. That means 1 lakh rupees. In 1 lakh rupees, you will be able to buy 1,000 quantity of ABC stock. Okay. Now let's assume that the stock goes up and reach your target of 125 rupees. What will happen in that scenario? You will be making a 25,000 rupees profit. Okay, this is for a normal cash order. The same thing when happens in a E-margin, with the same moment of a stock. Let's assume that you have a stock ABC in which you are having a bullish view. Now, obviously, you will not be required to pay 100% of the margin. Uh, because you are using a E-margin product, you will be required only to pay 30%, approx 30% of the stock value as an upfront cash margin requirement. So with the 1 lakh rupees, you will be able to create a position up to 3 lakh rupees. So instead of 1000 quantity, you will be able to buy 3000 quantity. Okay, so this is the first benefit. Now, since you are buying larger quantity with the same amount, your profit will also increase. Your profit will also amplify. In case the market now goes up, in case your target is reach of 125 rupees, your profit will be 75,000. So in our earlier example, we have seen the profit was 25,000. Now the gross profit is 75,000. So this is the benefit of E-margin product. Nothing has changed. Your stock has increased same 25%. That is from 100 rupees to 125 rupees. Um, your investment value was same 1 lakh rupees, but just because you are using the leverage product of E-margin, you will be able to make larger profit, almost 3 times more profit than a normal cash order. So that is an advantage of trading in the E-margin. Obviously, there is a downside as well. In case the market goes down, your risk also increases. So you can use this product in case you are comfortable using the leverage, comfortable playing with the margin. So this is the main difference between the cash order and the E-margin order. I hope this point is completely clear for all of you. Now, who can use this? A long-term investor can use the product. A medium-term trader or investor can use it, and obviously a short-term trader can use the product. So all three kind of a trader or an investor can use the product. A short-term trader or an investor can use it for a short-term trading. Let's assume that if you have a view on a particular stock for a 1 week or a 2 week time, so you can create a position using E-margin, and then later on you can convert it into a cash, or you can directly book your profit within a 2 week or 3 week time. So a short term or medium term trader should definitely use the E-margin. If you are doing, let's say, 10 trades in a month, and you are making a profit on 7 out of the 10, then obviously E-margin is the product for you. It's definitely, it will help you to increase your profit. It will definitely help you to amplify your profit potential. Now, for a long-term investor, even they can use it. So how they can use the E-margin product? This is the chart we have created just to give you an example how the long-term investor can use the product. So you can see this is the chart of HDFC Bank. Now, any other stock, it will also work as an example, but we have taken HDFC Bank, and this is a daily chart. So you can see an example in a month of April and May, the stock went down and was available at a very attractive price, obviously because of a coronavirus situation. Now, this happens once in a while in all the major stocks. Whatever the sector may be, you will find once in a while the stock will come down due to some news or due to some other reason at a very attractive price. Now, as a long-term investor, what you can do, let's assume that in the month of May, you wanted to buy the HDFC Bank at that attractive price, and you want to buy it with a heavy quantity, but obviously you might not have the entire amount, a bigger amount in your saving account. So what you can do, you can buy it in E-margin. Let's suppose you have 10 lakh rupees in your saving account, and you wanted to go heavy on HDFC Bank. You wanted to buy it, you wanted to invest 30 lakhs because you have a strong conviction that this is a very attractive rate. Stock market will move up in the coming months or in a 1 year time, and I should not miss out this rate. So you can invest heavily. You can invest 30 lakhs also, even though you have 10 lakh rupees in your account. And then later on, as the month goes on, as you have the capital, you can partially start converting your position into cash. So after 2 months, 3 month time, partially you can start converting your position into cash from E-margin, and then later on after 3 months, 4 months, or after 6 month time, you can convert the entire capital entire position uh, from E-Margin to cash. So this is something that you can do it. So this is the main benefit of a E-Margin product, that whenever the good quality stocks falls down and you want to buy it in a heavy quantity, and even if you don't have a sufficient fund at that point of a time, you can invest it with the E-Margin, and then later on you can convert a position from E-Margin to cash. Once you start converting the position from E-Margin to cash, the interest will always be charged only on the open position in E-Margin. So let us assume that you have bought 100 quantity, or let's say 1000 quantity in E-Margin. After 1 month, if you converted 500 quantity from E-Margin to cash by paying the amount, obviously, then only on the remaining 500 the interest will be charged. Okay, so this is the important thing. So what is the main benefit? That you will get the desired rate, you will get the attractive rate which is available right now, and then when the market goes up, you can start converting the position into cash. So even the interest will not be charged on the entire amount. So you have not missed out the rate. Plus you have converted the position into cash, so you don't even have to pay the interest for a long time. So these are the main benefit of trading in the E-Margin for a long-term investor. Same way, a short-term trader can take a position in E-Margin. If he is making a profit in a 1 month time or a 2 month time, it's good enough. He can directly book a profit, or he can book partial profit and convert the rest of the quantity in the cash, or he can keep the entire quantity open in the E-Margin only. So there are many flexible options available for all of the client, all of the traders, depending on what kind of a view you have on the market and how you want to use this leverage product. Now again, to summarize everything before, we will show you how to place an order and how to see the eligible stocks. E-Margin helps you to increase your buying power by increasing the margin up to 4 times for certain stock. It increases your holding power up to T+275 days. It amplifies your profit potential and return on investment. It helps you to take the advantage of a volatile market. Customer can take E-Margin position in cash or by keeping the share in collateral or in pledge. It's available in both the exchange NSE as well as BSE. It's not available in future and option. Leverage product is only available in margin equity. 18% annual interest rate is charged on the leverage taken, which comes to around 0.05% per day. Interest and mark-to-market loss will be charged on a daily basis. Now, what is mark-to-market loss? It's very simple. Let us assume that you have bought a stock at 100 rupees and the stock price goes down to 90 rupees the next day. So what you can do, that 90 rupees, or sorry, the 10 rupees difference is your mark-to-market loss. Okay, 10 rupees into whatever quantity you have, that is the mark-to-market loss. So that amount will be debited from your account. If let's suppose the next day the stock again moves up, stock again goes from 90 rupees to 100 rupees. So that 10 rupees again will be credited back to your account. So mark-to-market loss will be, you will have to be maintained for the entire duration whenever you have the open position in E-Margin. So I hope the basic part of the E-Margin is clear. Now we will show you from our website how you can place a E-Margin order and how you can check the list of eligible script in E-Margin. Obviously, E-Margin order cannot be placed in all the stocks, so it can only be placed in certain stocks. So which are those stocks? We will just show you with the example. So first of all, you have to go to our website hdfcsec.com. So this is our home page. Now just to see which are the stock which is available in E-Margin, you have to scroll down. Once you scroll down, you can see important information, and this is even before login into the account. Just you have to go to our website, you have to scroll down, you will be able to see important information. Under important information, you can see list of eligible script. Click on that. Once you click on list of eligible script, you can see the third option as an E-Margin under the product. So you have to select E-Margin, and once you click on that, on right hand side of the E-Margin, our page will be downloaded. That page will have the updated list of stock which are eligible in E-Margin with the upfront margin requirement. So let us assume that you want to see the upfront margin requirement for Aarti industry. So for Aarti industry, 45% is the upfront margin requirement. For ACC Limited, 30% is the upfront margin requirement. What that means? 30% means if you want to invest 1 lakh rupees in ACC, you will be required to pay 30,000 rupees upfront. Okay. Same with Aditya Birla Fashion Limited, you can see 40% is the upfront margin requirement. Then with Ambuja Cement, 35% upfront margin requirement. That means again, if you want to invest 1 lakh rupees, 35,000 rupees should be there in your saving account. So like this, you can check the entire list of stock which are available for E-Margin. In some of the stock, you can see on the right hand side in a remark, it's written further exposure disallowed due to whatever reason it may be. So there may be some stock which were allowed earlier, but right now the fresh position is not allowed in those stock. So you can check the remarks column. Most of the stock will be eligible, and there approximately the list goes on up to 400 or more than 400 stocks, around 455, out of which around I guess 50 of the stock will not be allowed. So around 400 stocks are allowed in E-Margin. All the major stocks are allowed. All the Nifty 50 and the main F&O stocks are allowed, given that they have a decent liquidity and decent volatility. So this is where you can check the entire list of eligibility and offer margin requirement. Go to our website, go to important information, click on list of eligible script. Under that E-Margin, download the page. Okay. Now, how to place an order? For that, you have to log into your account. Now, this can be done from your mobile application, from Pro Terminal, as well as from the ITS. So once you log into your account, you will be able to see the home page. Now, since you want to buy in E-Margin, let's suppose I want to buy ITC in E-Margin. I will just have to open a normal buy order. And once the normal buy order is open, I have to change an option of cash from product to E-Margin. Now, before that, we have to make sure that exchange has been selected as an NSE or BSE. Buy option has been selected. And then in the product, I have to select E-Margin instead of cash. That's it. The moment I selected E-Margin, I have to enter the quantity. So I'm entering 100 quantity of E-Margin, and I can click on Know Your Margin to check the margin requirement for the particular stock. So you can see for buying 100 quantity of ITC, I will be required to pay only 5,221 rupees, and 123 rupees will be my brokerage. So after checking the margin requirement, I can just click on a place order and the order will be placed. It's as simple as that. The only difference from the normal order is that I have to select E-Margin instead of cash option. That's it. That's the only difference. Now, one important thing, that if you're placing the order for the first time, once you select E-Margin, if in case you don't have a E-Margin privilege, you will be required, a terms and condition page will open up. So you will be required to select that, but you have to agree with the terms and condition page. That is the very important thing. Once you agree with the terms and condition, then then only you will be allowed to place an E-Margin order. This is only the first time you are placing an E-Margin order. So once you agree with the terms and conditions, then from next time onwards, they will not ask you for the they will not give you the terms and condition page. So only first time while placing an E-Margin order, if in case you don't have a E-Margin privilege, the moment you select the E-Margin from the product, automatically a terms and condition page will open up. You have to agree with that, and once you agree with that, you will be able to place an order smoothly. So this is how you can place an E-Margin order. The terms and condition part you cannot agree from the mobile application. So the first order or the privilege activation has to be done from our website only. Once it's done from our website, then you can start using mobile application for order placement or Pro Terminal for order placement. So I hope the point is very clear. E-Margin is a simple product. It's basically just a leverage product. You will be required to pay 0.05% approx interest on a daily basis for the on a leverage amount that you have taken. I hope the entire product is very clear for all of you. Now what we will do, we will start taking a few question and answer. So any question is there from your end, please enter your name and write your question. You can see the question mark symbol at the top of your screen. Just click on that, enter your name, enter your question and submit it. So we are not getting any questions. I hope the product is completely clear for all of you. Again, we will wait for 2 more minutes. In case any question is there on a E-Margin product, anything that you want to understand or anything that you want to know regarding a product, please click on a question mark symbol, enter your name, enter your question, and click on a submit button. Okay, so no question. Thank you very much, everyone, for joining this webinar in the early morning. I hope the session was useful for all of you. For any feedback or for any suggestion, you will be getting a mail from us. Hopefully, we will be getting a mail from us after this webinar. So in that you can obviously suggest your suggestion. Mr. Puneet Astana, I have a question. What is the difference between offline and online trading? So Mr. Puneet, that is a question not related to this particular product. That is not related to this particular webinar, so we will not be able to answer on that. This webinar is only on E-Margin, so any question on E-Margin session, you can definitely answer onto that. So I hope there's no question that is coming on the E-Margin products. So thank you very much, guys, for joining. Mr. Bhavesh have a question. Mr. Bhavesh K have a question. Will we be reminded of a T plus 125 days? So Mr. Bhavesh, it's a T plus 275 days, not 175 days. And yeah, you will be reminded, you will be sent a message on the day itself, on the day when a T plus 275 days is going to expire. So there are a couple of things that you can do. Either you can square off your position and take a fresh position on a T plus 275 days, or you can let the system square off the position on a T plus 275 days. But yeah, you will be reminded by the system either through the mail or through the SMS. It will go to you on a T plus 275 day that this is the last day of your position. So you can either square off, or if in case you don't square off by 2:45 p.m. on that particular day, the system will automatically square off your position. What will be the brokerage rate? Mr. Nayan have a question. So brokerage will be same as the normal delivery charges. Whenever you are buying the stock right now in HDFC Securities, whatever is your brokerage charges right now, the same charges will be applicable for E-Margin product. There is nothing will be different in this. Mr. Puneet Astana have a question related to a tax rate. So there will be no difference between the tax rate as such. See, the tax rate of the profit is on the gross profit, is on the net profit, sorry. So your net profit will be after deducting the interest rate transaction. Okay, so let's suppose that you have bought a stock, you made the stock went up 15%, and obviously there 2% you have paid in the interest, around 1% you paid in the brokerage and other charges. So your net income will be around 12% only for this entire transaction. So your whatever taxation part that comes into the picture, the short-term taxation, that you have to pay only on the 12%, which is your net profit. Mr. Punit, have one more question. Can we square off before T plus 275 days? Obviously, Mr. Punit, you can square off even on the same day itself. If that's suppose I bought a stock in E-Margin, but I want to square, I am getting a good profit today itself, and I want to square off, I can do that. Similarly, if I want to square off the order on a T plus 1 day or after 10 days or after 15 days, I can do that also. So there is no restriction from our part. We can square off our position whenever we want. Whenever you want, you can square off your position. There is no restriction. In case you don't want to square off, but you don't want to pay interest on the amounts, you can also, you have an option to convert your position from E-Margin to cash. So even that option you have it. So I hope the answer is clear. So any more question? We still have, I think, couple of minutes. So any more question? Please use this opportunity to ask it. One more question from Mr. Bhavesh K. How much is the E-Margin percentage? Mr. Bhavesh, E-Margin percentage, please elaborate your question. Please repeat your question again. If in case you mean to ask that what is the percentage requirement for a stock, that means that will differ from stock to stock. We have already given you the list of stock. In this list, you can check the upfront margin requirement is different for different stock. Let's say for Amara battery, if you want to invest 1 lakh rupees, 35,000 rupees will be the upfront margin requirement. Similarly for some of the other stock, let's say for Alembic Pharma, 40% is the upfront margin requirement. That means 40%, if you want to invest 1 lakh rupees, 40,000 rupees will be the upfront margin requirement. So the E-Margin percentage, in case you mean the upfront margin requirement, that will differ from stock to stock. Mr. Asthana want to know the answer on tax again. So Mr. Asthana, is very simple. The taxation part, the tax will be applicable only on the net profit. So let's suppose if you're talking about the short-term taxation, the short-term tax will be applicable only on the net profit. So let's suppose if you bought a stock went up 15%, 1% you paid in the brokerage and other charges, 2% you paid in the interest. So your net profit will be around 12%. So only on 12% you will be required to pay the interest. Mr. Bhavesh, one more question. Can we choose less than the listed margin? Mr. Bhavesh, no. Obviously, you will be required to pay the margin requirement which is shown in the list. You cannot pay less than that amount. So I think we have taken all the question, and we are anyway short of time. So thank you very much, guys. Thank you very much for joining us. Have a great trading week ahead, and have a great trading session for today. Thank you. Thank you very much. Signing off.